Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com for August 24th, 2007. Well, it's finally Friday after the close. We get a little break for the weekend, and I'm going to use that to get some R&R for myself. But I want to go over what happened in the markets today and what we're looking for next week as well. And as you guys can see, this is the chart of the ES Futures, the September contract, and it was just a constant up move all day pretty much. You had the basics of it, and this gets down to what we talked about yesterday and a few days before. You guys know that I've been saying that this cautionary, you have to view it cautionary, though we have been saying that we've been expecting this move up, and we said we expect the move to be sideways to up, which it continually is, even though today was somewhat of a harder move up. It was still on minuscule volume. And what you guys remember is last week when we were falling, what kind of volume were we doing in this market? We were doing, on ES contracts for instance, we were doing 4 to 5 million contracts, and that was when the market was falling. This week, since the market's been moving up, we've been doing 1.5 million contracts. Alright, so you're really talking about 1/3 the volume. Well, guess what today was, guys? The NASDAQ goes up 35 points. The Dow goes up 140 points. The ES contract was up 17 points today. And how much volume in the ES this today? Under 1.2 million. So even on the light days prior, we had 1.5 million. Today we couldn't even squeak out 1.2 million. This is what summer trading is now, guys, and you guys are seeing us get back to this formation here. And you can see very light trading all day long, minuscule volume. And I just want to kind of point this out to you guys. And I'm going to just draw this down here on the trends. Look at this volume up here, guys. Here's the fall when we started, right? Straight down. And this is where we started to bounce. This is the day that we bounced. The first day we bounced. This is the day following where we had a significant move. Alright, so we're going to really look at this right here. Here's our volume, right? Look at all this. Right there. Look at these volumes, the last 3-4 days here, guys. And look at today, how minuscule this was today. Right here today, it was even tinier. You're talking about half the volume from the last few weeks here in the market. And for those of you guys that don't understand technicals and the idea of working with volume and price action and understanding the differences in moves, you really need to understand that volume is a key here, alright? The big boys, the hedge funds, the big players in this market are able to support this market with a minuscule amount of volume, thus a minuscule amount of capital. They're able to push the market up here, trying to get all the longs back on the side of bullishness, so they can unload on the big volume spike down in the near future. Alright, now what do we want to talk about here, guys? This is what we're looking for. We're looking for on the ES future contract a move to about 1498 or so, give or take a couple points. What are we at right now? The close today saw us right here at 1483.5. So we have about 10 to 15 points more upside, about 15 points more upside to go before this market tops out. And that should generally coincide right underneath the 50 moving average here, which is what we've been talking about here, alright guys? And what number, I mean, you guys always wonder why we get these numbers. There's a couple reasons. One being you have the resistance here, the 50 moving average, and there are two other proprietary analysis that we use that tops us out here. But in addition, what other number is this approximately up here? It's the 0.618 Fibonacci retracement number, okay? That's a technical retracement number that can be used in analyzing markets to understand where to look for resistance, support, where could a market come back to, or where could a stock bounce back to. And this right here happens to be the 0.618 Fibonacci retracement. Those of you guys that don't understand fib numbers, go Google it, and you guys will get a sense about it, okay? Very interesting stuff. Now, looking at the NASDAQ. The same chart today with the NASDAQ, guys. Look at this. I mean, you can almost draw a trend line under these moves and just buy all the way up. Every time it touches the trend line, you buy. Touch the trend line, buy. Touch the trend line, buy. Straight up. And this was basically a channel here, guys, okay? Look at the channel we were in. Channel all day long, super light volume all the way around, and everything just got a nice little pillow lift. It was like they're setting the market up so gently for another bull run here. But let's be honest, guys, it's not that easy. There are issues here. The subprime worries are somewhat out of the market. And you guys have to understand, when I go into a diner, when I go into a restaurant and hear other tables of average people, average working class people discussing the subprime mess and how horrible it is, that tells me right there and then it's over. That's not going to be the next catalyst for the drop, okay, guys? That is over. It's got to be a new catalyst, whether it's getting into the prime rates, whether it's the yen carry trade, whether it's the dollar falling. We don't know yet. But the technicals are telling us that approximately either mid next week, maybe Tuesday, the 28th, we're having a weird constant coming back to this August 28th date. I don't know if it's going to have any play in it, but it could be a day or two later. But you have this next week period, and then the other way of looking at it is that next week is the week before Labor Day. Everyone's on vacation. Volume is going to be insanely light, and we could see this market hold off till the following week after Labor Day. All right, because we have that Monday off a week from Monday is Labor Day. The markets will get back to trading Tuesday, and that could be when they're going to wait for this market to really roll over hard again. All right, now let's look at the NASDAQ on the daily here. This is the daily NASDAQ. What we were looking at before was the intraday. Daily NASDAQ chart. All right, we're looking for a move right up to here, guys. Okay, right up to that 50 moving average, and that's approximately 2,600, a little under 2,600, 2,599 thereabouts. And again, what do you guys think that corresponds with? Yes, this Fibonacci 0.618 retracement. So we could see a move of another 20 to 30 points on the NASDAQ just up to here, and at that point, that's where I'm going to feel safe taking my position on the short side. Okay, and again, this is just me talking about what I'm going to do. You guys do what you want. I can't advise. I'm not an advisor of any sorts. All right, I'm just an average, hopefully slightly above average trader here, which has many years experience and so forth. So that's what I'm looking for personally. That'll be my first entry price. And you never go too heavy on your first entry price. I will personally just take maybe a decent sized position here, maybe on the SDS or some ETF, and look for a fall down, at least a retracement down, possibly down to the double bottom low right down here, which corresponded with March's low in February and February's low right in that area. All right, and if you guys remember the videos, we talked about how that low on the SPY chart, and we'll turn to the SPY, this low here corresponded with the low back in right here. All right, this low right here corresponded. So what we are looking for is a possibility of, see this retracement here, guys? This is by no stretch a bullish chart pattern. Okay, look at the fall here. All right, you naturally have a bounce back effect. Okay, and you're getting that here. What you're going to look for now is the next leg down. And again, this leg down should take us down to this low again. There'll be small bounces along the way. But then the key then becomes when we use the technical analysis and see whether or not we close below this line here. We close below this line, you could be seeing a drop down here, folks. Okay? But again, one step at a time. Let's get this final bounce out of the market. Let them get everyone bullish. Again, guys, you guys are special here. You guys understand the contrarian view here. We need everyone on the bullish side again so the market can fall. Because whichever way there are more people feeling it's going to go automatically opposite way. Now, I've been bullish ever since this low when everyone was bearish. That's when I turned bullish and said, yes, we're going to get a bounce. Now, we've gotten the majority of that bounce, and I pretty much moved all long positions out of the market at this point. I still think we'll have a little more upswing, and that's when we're going to look for it to pick up a couple things on the short side. Again, you always want to go with caution because you never know what the powers that be will do in this market. Okay, guys, I'm just going to close it down now. I just want to talk a little bit about the week we had. We had an interesting week in the day trading chat room. A great group of people in there, guys. Absolutely great group of traders. We constantly are trading, discussing the markets. We did tons of technical analysis this week because of the light volume. It was a great learning week. We talked about MACD. We talked a little bit about different characteristics, chart patterns, level 2s, odds and ends. It was a very good learning experience for the intraday stock chat people. And we will continue that next week in the light volume. All right? It's almost like having a seminar over the course of a month, really. You just learn so much. And here and there are great trades to scalp $100, $500 out of, $300 out of, whatever it may be. We're scalping it left and right. Okay, guys? Have a wonderful day. Join the swing trade alerts. We continue having some good swing trade alerts out there in this market as we've called the major moves each way in the market. Again, be careful. Cash is still king here, guys, at the top. We're near the topping pattern here. You don't want to be too far exposed either direction for a move either way here. Have a wonderful day. I'll update you guys. Email me questions, whatever you wish. I'll talk to you guys about. Take care.